All right, good morning, guys. So happy Thanksgiving to those who celebrate this, to our US friends. Definitely, a non-existent afternoon ahead in terms of market movement. But we've had some movement this morning already, and it's a continuation of the kind of theme that we had yesterday morning, and that is a sort of dovish and optimistic set of markets where you're getting further pricing in of more ECB action. You know, we're only a week away now. This day next week really kicks off the phenomenal run into the end of the year with the ECB delivering, and expectations are on the up again. It's been a funny couple of weeks. If you had a chart of, well, actually, let me just bring the DAX in here. I'm going to make this bigger, this 1 hour chart. You can see what's happening, and more new highs. So this is extending on the 3-month highs that were set yesterday, as we just about edged up above last week's sort of double top. That really killed the momentum, and it was flat into the close, and we're going again this morning. So another extension of the similar move. Now, if you were to have a chart of ECB expectations, then actually it would look pretty much exactly like the chart you're looking at here. We had expectations drop going into the beginning of this week. Of course, this downside was also helped along by the Russian jet fighter getting shot down by the Turkish. But it was also about maybe a bit of nervousness. We had a nervous wobble at the start of the week when it comes to what are the ECB going to do. We were pretty certain and pretty confident until we had a bit of a wobble at the start of the week. We had some good data from Europe. The PMI is nice and strong. We also had good, solid German IFO data. Then we had Laut and Schlager saying, "Hang on, we don't need more stimulus," and it was like a bit of a panic that maybe we're not going to get what we want. But that panic has been removed, and we're back in the mood where the ECB are delivering. They're going to deliver in style. There is a problem with this for the central bank. And when expectations are so high, then really they're kind of backed into a corner and they've got no choice. Or unless they want to trigger some violent market reaction. But what we had yesterday morning, we haven't had any more news really this morning that we haven't. It's not like we've had more communication. It's just more of the same theme. So yesterday morning we had some sources comments from along the lines of the ECB. Let me just find the quote. 1 second. So source reports continue to be announced, and they're basically saying that you may well get almost like a triple whammy from the ECB next week, where they're going to cut the deposit rate. They're going to extend the time frame of quantitative easing. Currently, it's due to end, as you all know, September 2016, but we're expecting a 6 to 12 month extension. I mean, whether it's 6 or 12 months, I think is a pretty important detail when you're buying 60 billion euros a month. An extra 6 months starts adding up. So there is uncertainty in what's going to happen, but we're expecting a deposit rate cut, an extension to the time frame of quantitative easing, and we're expecting them to officially announce an expansion of the pool of assets that they're willing to buy as part of this program, and adding in the municipal bonds at least. So these are the three things that we're now definitely expecting, and this is what's happening this morning. Yesterday morning, we're pricing it in. It's got to happen. If it doesn't, we don't get all three, this market's going to sell off. So expectations have ramped higher. You've got associated movement in other assets. Look at the Bund. So the Bund and DAX, strong upside yesterday morning. Extensions of that this morning. The Bund breaking up above yesterday's high. A lot of this is technical. And so for both of these markets, you've got, well, certainly for the DAX, you've got a 3 or 4 month high. For the Bund, I'm going to flick to the daily chart because it's not a 3 or 4 month high. It's a 1 month high. And what's really important, we're pretty much there. If you look on your continuation charts, the October top, 158.60. And so be aware of that price. Today's high so far is 158.47, 13 ticks shy of that key top. Okay, so be aware of that price point as a key resistance. Obviously, the euro's been under pressure for the same reasons. Big downside yesterday morning. Nice rebound, actually. Just after the European close, we got a pretty punchy, quite nasty bounce. And then it flattened off. And this morning, we're just heading back to the 106 handle. When you're looking on a daily chart, it looks less violent. It looks like just a nice continuation of the theme, which is one way, and that's downtown. And we're still going. The key level, obviously, for the euro dollars, these bottoms we had back in March and then also in April, 105.29 and 104.74 is the low of the year. So this is what it's about. It's pricing in of the ECB, delivering the bazooka. We've also had a bit of a calming in that geopolitical space. That flared up at the start of the week, of course, and that's just seemingly calmed down. It looks like this situation isn't going to escalate into anything more serious at this point. So the Russian plane getting shot down by the Turks, it looks like it's going to pass away into the ether, and it's not going to create a diplomatic situation of any note. So that's what's playing out this morning. We've had the only data this morning we've had is some Spanish GDP figures. Let me just show you a bit of a chart. Spain is the darling of peripheral Europe when it comes to economic performance. Here's a chart of their GDP. So the thing about this is we had a 0.8% reading. As expected, this isn't new. This is the second preliminary number. So we already had 0.8 announced a few weeks back. So it's just confirming this. But it's the one thing of note, obviously, on this chart is we've seen a drop in the growth rate, and it's been a very consistent build and increase of momentum. So a very impressive 1% for quarter two. That's 1%. That's in one quarter. That's not annualized. That's like a 4% annualized growth rate there. So we've dropped. So is this significant in that the Spanish run of form is just now topped and we're declining? Or should you look at it and say, well, actually, check out the last four quarters, 0.7%, 0.9%, 1%, 0.8%. This is very, very strong growth. You can kind of look at this in two ways. The optimist would say, look, this is still very powerful. The pessimist would say, we've peaked. It's down. It's downwards from here. So depending on your viewpoint, it will depend on how you interpret this. But, this isn't new. This number was in the markets already. It came in line as expected, nothing dramatic. So, and let me show you the data calendar, because that data's come in already. And I'm afraid to say that's basically it. This is a session where you're not going to get much opportunity. So we have one data release left, which is the money supply number out of Europe at 9. Okay, we've got some German GfK consumer confidence data at 12. Nobody looks at this. We had the iPhone number earlier in the week. That's what we look at when we gauge sort of confidence levels within the German economy. We don't tend to look at the consumer side. So this number's not going to make a difference. And then these French numbers at 5 o'clock, everyone's going to be long gone by 5 o'clock. So really, the one event then is perhaps ECB's Lind, who's due to speak at 10:40. Keynote speech talking at the International Banking Conference. So that's the only thing that could potentially have an impact, I would say. We've got an Italian T-bill auction at 10. That's not going to, they'll shift that lot, no problem at all. I don't think you're going to get any kind of market event here. So it's really just down to Lind. And is Lind going to pop the bubble of expectation that's driving market movement for the last 24 hours? is Lind going to downplay or try and downplay expectations or not, just fuel them even more? So we'll see. Just looking around these charts then, notably, look at the S&P. This is, we had such a strong resistance up around where we're trading right now. Anywhere from sort of 2092 up to 2094. Key tops right the way through the last sort of 5 sessions. Every single time. It's R1 today as well. Yesterday's high is here. The high from the 23rd of November, the high from the 22nd of November. You know, so many tops up around here. Really strong resistance. You might even say you got a bit of a reverse head and shoulders on this chart. But anyway, what I was going to say is a real reluctance yesterday from the US markets to join in on the sort of European party. As the DAX was ramping 2+% higher, the S&P finished flat. And actually, a good stat for you, yesterday's range on the S&P cash market, 7 points. That's the second smallest range of 2015. So Thanksgiving definitely started a day early, and that you know, yesterday's range is currently the second smallest of the year. It's almost certainly going to become the third smallest of the year after today's session. Well, actually, sorry, there isn't a session. What am I saying? New York Stock Exchange is closed, so there won't be a range in the cash markets. But yeah, just be aware of this key resistance up here, the S&P. But yeah, definitely a notable divergence in performance. And as I said yesterday, you know, as we approach December, as we get nearer, ever closer to these monetary policy events, then this divergence might become more of a feature, where you're getting Europe react to the ECB, and you're getting the US react to the Fed, and they're doing opposite things, and so you're going to get opposite reactions. Okay, so quiet session. You know what we do, and actually, well, just before I wrap up, just talking about the Fed there, just further from another interesting chart here from the Goldman's report, looking at how, you know, because what's going to happen as we get closer to this 16th of December meeting where the Fed are going to hike rates, the conversation is going to be less about are they going to hike rates or not. You know, what does the beginning of the cycle mean? It's going to be less about that, and it's going to be more about the speed of the cycle. You know, when's the next hike? And how many hikes are they going to do in 2016? And how many in 2017? You know, it's going to be more about the trajectory of the rate hiking cycle. So have a look at the chart on the left here. What we have is market expectations, the dashed line, all right? And what we have is Goldman Sachs. They're saying that the Fed are actually going to hike rates faster than markets expect. But then interestingly, they got the last 3 hiking cycles on this chart. And look how steep the sort of 1994 cycle was compared to what we're expecting here. What we're expecting is the slowest hiking cycle in history. And we're kind of a bit panicked about that. And yet it's the slowest ever. So I think markets might get or might get used to this idea and might find comfort in the fact that this is going to be the slowest cycle in the history of mankind. And Goldman's view is that the S&P isn't going to rise at all. Now, in 2016, the end of 2016, and let me show you the chart. I showed you this yesterday, but I'll just finish on this stat. At the end of 2016, sorry, let me get the chart on screen here. At the end of 2016, they expect the S&P to be at 2,100, where it's trading right now. 0% return on the S&P 500 for the next 12 months. But what their view is that the Fed are going to hike. It's going to be so slow that the stock market's going to avoid damage. That's what they're basically saying. And then we might get meager growth in 2017 and 2018 in terms of the index value appreciating. All right, so look, let's get on with it. It's going to be a very slow session. You're gonna have a new understanding of the word patience by the end of today. It's a day where you need to, for the large part, sit on your hands. Opportunities are going to be few and far between. If and when they do arise, take them. But you're going to have to be patient with these trades. Nothing's going to move very far, very fast. You've almost certainly seen the biggest move of the day already, with this pop higher this morning on risk assets, the pop higher on the Bund. It's almost certainly the biggest move you're going to see today. So bear that in mind. Don't expect an equal or larger move again from this point forward. All right, that's it for now, guys. Enjoy the session. Thanks. Happy Thanksgiving.